Hi everyone, I'm Ken, the inventor of the CTKS method that shows where smart money is buying and selling. Each day I seek to give you an edge in the market using professional smart money rules and thinking based on my more than 30 years experience in financial markets, to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you want to get the institutional edge, please subscribe. You'll find we have one of the best communities on YouTube. Let's run the numbers. Bitcoin is currently down 3% to 23,231. Ethereum is down 2.42% to 1612. In this episode, we're going to talk about retail reactions to the recent sell-off. There's an increasing number of people that are saying a 1929 type crash is coming. We're actually going to look into that from a smart money institutional mindset perspective. People were feeling pretty optimistic about things and then something happened. What was it? The core PCE, which is a consumer price inflation indicator that excludes food and energy, came in hotter than anticipated, plus 0.6% versus plus 0.4%, and that gave a bit of a shockwave through the markets. In fact, when it came out, the major indices dropped. And as Bitcoin cannot escape the stock market's gravity, Bitcoin also dropped. One thing to remember, the unemployment rate is exceptionally low at a 53-year low. But we do have persistent wage inflation. We saw personal spending come in hotter at 1.8% versus 1.4%, and new home sales were hotter as well, 670,000 versus 620,000. Preliminary GDP quarter on quarter was lower at 2.7% versus the expected 2.9%, so it was a bit of a barrage of bad news. And what happens when the markets go red? The news headlines go red, the sentiment goes red as well. The rule inside the masterclass, which is really important, Bitcoin cannot escape the stock market's gravity, but your beloved alts cannot escape Bitcoin either. All their fate is interdependent. When Bitcoin comes down, the alts come down. Now you have a bit of a background as to why the crypto market actually came down. How bad could it actually get? If you listen to people on Twitter, it's going to be 1929 all over again. But is it really? You can see that I've created this chart here, which is basically Bitcoin as a ratio to the S&P 500. Now, let's just have a look at it. This particular influencer on Twitter is saying Bitcoin is so overvalued versus the S&P 500 that a 1929 crash is about to happen. Okay, let's check if this is actually correct. Let's just put this little guy up here. You can see the chart. There it is. Now let's actually zoom out on this and see what we're looking at. Oh, it's not on log. How naughty. Statistically, things must be on log chart if you're comparing exponential growth patterns. As a former lecturer in first and second year statistics, I saw so many people in retail media doing this. And actually, I come from a financial background as well. One thing that you must always do, and I wish people would do this, put long-term growth rates that are exponential on a logarithmic scale. That's the only way you can understand what you're looking at. So, epic fail number 1. Masterclass students know this. Now, don't forget, this is Bitcoin versus the S&P 500. What do we see here? What is this chart actually? If I actually overlay Bitcoin's price history, just its normal price history, and that's what I've actually done right here, you can see it's just the over and under extension of Bitcoin. It's just Bitcoin's price history. As traders, professional smart money traders, we understand that price is negatively biased, and when prices go down, it causes retail panic. Basically, people just run for the hills. And it's exactly the time that they should not be running. They should actually be scaling in intelligently. Remember that this particular chart that this influencer drew up was Bitcoin versus the S&P 500. So let's have a look at the S&P 500 to see if it's technically weak. As a community, we do deep dives into everything, and when we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, we can actually see that the current price of the S&P 500 is this white line. How does it look to you? Does it look like it's actually breaking its support? Does it look like it's under resistance? Please let me know in the comments. Masterclass students use the EC method. It should be very, very obvious what the answer is. Price action can freak a lot of people out, and freak is a technical term. And this is what freaking out looks like. As a smart money global family, we look at price very, very differently. We look through institutional eyes. We need to know where the strong, objective, dynamic market structure is within the particular asset class that we're trading. How do we do that? We draw up our zones, our Stanfield zones, with the CTKS Method Standards Certifications process, and by that we can see that the S&P 500 has very substantial support below it just at the moment. It didn't have much support previously. It had a lot of overhead resistance, but it's coming down to what we would call a safety net, where the buyers will step in. But if you look at what's going around social media at the moment, it's like the earth is going to swallow the financial markets up. What do we do to guard against these retail emotions? Because they're all about panic. Fear of missing out, one form of panic, and fear, uncertainty, and doubt, what people are feeling right now. We have to have a systematic way of looking at the markets. First of all, you require your foundations. Then we need to check the stock markets and world events, collecting probabilities from the outside, because we know Bitcoin cannot escape the stock market's gravity, and a lot of other things can't escape it either. Then we hop back into the crypto market, finding the market's focus, understanding that opportunities reset daily, and we must have positive excellence so that we can master our emotional control before we actually come to buying and selling. Inside the masterclass, I tell people how to dissect things that are seen in social media. And the CTKS method, which is quite an extensive method, is all about understanding where the real support and real resistance levels are inside any market. Overall, global markets are looking pretty healthy. What we've seen recently are the US government yields coming up, and they've spooked the market because they've increased quite significantly. But we've been tracking this for quite some time. We knew it was coming. When we look at the main markets, we can see the VIX came up and also the DXY came up. Remember, the DXY is the global wrecking ball. So if the global wrecking ball is coming up, it's going to be putting pressure on all kinds of things. Main markets, Bitcoin, gold, bond prices, and inverted to that, bond yields will be coming up. We can see that oil is currently coming down, and we did have a bit of an upsurge in risk appetite through junk and high yield corporate bonds, but that was put to an end with the spike in the dollar. This chart is directly from the masterclass, and you'll find it in TM6. In episode 813, I put forward this chart that I've actually shared inside the masterclass in LV28. We need to be aware that local bottoms are not realistically in until junk bonds and high yield corporate bonds stage a bit of a rebound. We also want to see inverse credit risk actually coming up and the inverse VIX coming up as well. There's a lot of pieces inside this jigsaw puzzle that you need to put together. And when people first get into financial markets, they're just looking at a specific thing and saying, I'm just going to buy and sell this. Oh, I don't care what's happening with the main market. That's just irrelevant. I'm just going to buy and sell this and I'm going to retire tomorrow. We know as professionals, it's just not that way. You must put the jigsaw pieces of the puzzle together each and every day, and they always shift. The economic machine can be very difficult to understand. But you do need to understand it. And one thing that we're looking at the present time, the 5-year break-even inflation rate and the 10-year are still marching up, as is the 5-year forward inflation expectation rate. When these three things go up, it's not so good for the markets because yields must increase to push them down eventually. Just bear these things in mind. There's a lot of different jigsaw puzzle pieces to put together, and you need to put them together every single day. The cost of not doing that is getting forced out of the market by retail sentiment. Just to keep in mind, the probability of a 50 basis point increase in the federal funds rate is currently sitting at 27%. That's up from 2.8% 1 month ago and 18.1% 1 week ago. I'd like to take you through a quick discovery of the difference between retail and professional smart money thinking. We can see that we've got some upward support levels here on the 2-hour. So what we're actually looking at, a lot of retail would expect the price to actually bounce from these levels and retrace. If it went below there, they would think there's no absolute support inside the market and the price would just fall. Let's have a look at actually what happened. Was retail correct, or did the smart money actually step in between 23,142 and 23,226? Remember, this is when the core PCE came out. What was the reaction to the core PCE? It wasn't good. It took the market down. And it took it through those retail levels. It just sliced it. It ignored it. But what was it doing? It was actually hovering around the smart money buy level. And this is the thing that you want to keep in mind. When you actually know what smart money knows, you know something that retail doesn't. But why is that important? Because you need an edge. Bitcoin is currently trading at 23,114, and we can see that this smart money buy level absolutely acted as a support level. The next one down is a much weaker one, but it's still there at 22,571. We need to get around 24,100 to show that positive momentum has re-entered the market. The next major buy area is from 20,629 to 20,979. There was a lot of retail enthusiasm piling into the crypto market, and we saw that because the Bitcoin longs were going up. But the shorts said, lots and lots of longs. What do we do when there's an overbalance either way? Lots of shorts or lots of longs? The other side gets liquidated, and that's what it's always been about. In the last 24 hours, there's been 163.48 million in terms of total liquidations across nearly 60,000 positions. A lot of people got really damaged by what happened inside the market, the release of the core PCE. And when we look at total liquidations across the past 24 hours, about 93% were long. What about the past 12 hours? Say 91% long. Oh, the longs have been getting hard hit. What about the past 4 hours? 91% long again. And what about the past hour? Oh, it's going up. 93% long. We're seeing a cascading of long liquidations. When the market sells off like this, we're getting on the right side of the percentage. But we must be intelligent how we enter. Yesterday, I talked about the 10-5-10 video, and I actually made it open to the general public. The concept of 10-5-10, you put your buy orders down as low as you can expect to go. And when I say expect to go, it's generally a lot lower than where most people think price will go. That's exactly why I was talking about 10-5-10 yesterday. One thing that we need to look at, because there's always opportunities inside every single market. As Jim Cramer said, there's always a bull market somewhere. And it's true. There's always a bull market somewhere, especially in crypto. And when we look at Bitcoin's gravitational fingerprint and we overlay that against the alt, we can still see Ethereum is acting more strongly than Bitcoin. And this is coming out in the particular percent decline. Bitcoin is down around 7%. And Ethereum is down about 5%. It really matters. What about BNB? It's just aligning with Bitcoin's gravity at the current time. XRP is down, but it's down less than Bitcoin. It's about 4% down. Bitcoin is about 7% down. Well done, XRP. ADA is around nearly 9% down. And what about these three things here? Well, this is Tether, the stablecoin Tether, the stablecoin Circle, and BUSD, the Paxos issued stablecoin for the Binance exchange. And you can see stablecoins have never ever been stable, but a lot of people think they are. With this analysis, we're now starting to look for inverters. The market has given a clear direction. It wants to go down, and there could be some overhanging momentum inside that. The market could come down for a couple of days or even longer. If that is the case, we're looking for rebounders and inverters. Solana is a rebounder. Solana can rebound so incredibly quickly. Doge is also a rebounder. There's a lot of rebounders out there. But first of all, let's just look at Bitcoin's gravity. Matic is following, Doge is following, Solana following, DOT is following, SHIB is following, Litecoin, AVAX, and Tron all are following. Justin Sun hasn't turned the light on for Sun in the dark days yet. Having rules is an incredibly important thing to do, and understanding the market's rules is even more important. When I say no alt can escape Bitcoin's gravity, you're actually seeing in real time what I'm talking about. And this rule has been taught for a long time inside the masterclass and inside the public channel as well. We can see Uni coming down with Bitcoin's gravity, as is Atom. Link is also coming down, Filecoin coming down, LDO, NIA, APT, and HBAR all coming down at the current time. So what we're going to keep our eye on is which one recovers fastest. Looking towards the next date, VET, APE, ICP, Algo, Quant, The Graph, Phantom, and Flow, we can all see they've been pulled down by Bitcoin's gravity. Please let me know, do you think there's any cryptos on this page that are recovering well? Looking at the next 8 cryptos, we're looking for strength. We're looking at a firming pattern, and a pattern that's going against Bitcoin's gravity. What do we see with Mana? Mana following Bitcoin's gravity. Theta a little bit stronger. This theta is a very, very interesting pattern. Look at that low. That's a low, but that's a higher low. Theta is making a higher low pattern when all of the other ones are making lower low patterns. Could be really good for theta. Keep your eye on that. Put it on your radar. We can see Aave just following Bitcoin's gravity, as is Axie Infinity. Chile's just a little bit weaker, but Luna C looks to be putting in a really interesting pattern, another one for your radar. Clayton just following Bitcoin's gravity down, and Stacks just again defying Bitcoin's gravity. We have ourselves an inverter. Please let me know, is this kind of analysis helpful for you? We can see for the top 9, Bitcoin is currently down a little over 3%. Looking at the top 100 gainers in the past 24 hours, the old Binary X up 15.96%, and the new Binary X up 14.23%, followed by Singularity Net, AGIX, then Optimism, Leo, Lunacy, Synthetics, and we've got a couple of stable coins down there as well. The greatest losers in the past 24 hours, top 100, Conflux getting massive indigestion, down 21, nearly 21.5%, Stacks down 10.7%, Filecoin, Anchor, Bone, Neo, Tezos, Engine, and Curve. Yesterday, we examined the comment of inner volatility versus inner harmony, and the market penalizes inner volatility and it rewards inner harmony, so it's really important to get a handle on these two things. A very big thank you to everybody who commented on yesterday's video. Edwin had some really good ideas to turn volatility into harmony. Point number 1, be realistic. Point number 2, always be learning. Point number 3, always remember that the market controls the return. Point number 4, always mark up your charts, do your due diligence. 5, manage your risk. 6, think about systems. 7, rules and systems are the focus. Number 8, always forget about entitlement. Drop entitlement, it will bite you financially. And point number 9, start small and scale with BORSOG. Thank you, Edwin. Very, very good points, my friend. We have such an incredible global family. If you're new here, please consider subscribing and just reaching out and saying hi. We have one of the best communities on YouTube. Thank you, Wabi Sabi, for your comment. It's really good, and I'll look into that one tomorrow. And JT, a very happy birthday, my friend. Jay said, what a great video today, and how amazing to see that you scale in steps, because that's what I have learned as well, without being greedy. I couldn't have wished for a better birthday present with today's video, so from the bottom of my heart, a big thank you, Ken. You're very welcome, Jay. This community has changed my life significantly in a positive way, and thank you to Crypto Badger, who granted me the membership with the ambassador discount to join the masterclass after a significant life event that took the air out of my lungs. But I am back. If you're going through a life pullback at the moment, please know that our global family's love and healing thoughts are with you. You're not alone. You're part of a global family. And it's really good to also keep in mind that we always encounter pullbacks in life, just like we encounter pullbacks in the market. But these pullbacks are actually gathering your strength for the next setup when you hit support for your next life promotion. Life is always moving in waves. Al had some fantastic thoughts to share as well. Al says that moving from volatility to harmony is a unique journey for everyone. Getting physically active and calming the mind are very important things to do. Reaching out and making social connections is very important as well. An absolutely brilliant thing that Al said is starting from a place of gratitude is an exceptional way to begin and end each day. Couldn't agree more, Al. Very, very beautiful and wise words, my friend. I'm so very happy to see old names reach out and just say hi. It's just so beautiful to see you. Crypto Badger also had some good things to share about calming inner and outer volatility, meditating, taking deep breaths, getting extra sleep, just basically focusing on calmness. Crypto Badger also had something on gratitude as well. If you remember the days that you prayed for things that you have now, you will feel grateful. Positive excellence is definitely the key. Thank you, my friend. Congratulations on your persistence, dedication, and commitment. If you're hearing these words now, you put in the hard work to go through so many factors that will help to make you a blessing to yourself and those you love. And if you're not in the masterclass and you would like to get into it, please let me know in the comments, because the Beardy CTKS Partial Masterclass Scholarship is now coming up. As a quick summation, it's really important not to get caught in the retail mindset. As soon as markets turn red, especially if they do so over a couple of days, people get very, very negative and they run away from the market. This is exactly what smart money wants. They want to buy and get on the right side of the percentage. Be smart money and do not be retail. It's just too expensive to have retail thinking. Just think about it in terms of shopping. If you bought at retail price, did you overpay? You certainly didn't get a discount. Recommended retail price is the base level price, and that's always higher than a discounted price. You're looking for discounts, and that's what smart money does. Have a fantastic weekend ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Bye for now.